And in our top business story, Emirates Airline has announced the repayment of 2 bonds totaling over $1.1 billion, meeting its maturity date of the 8th of this month. The airline announced today that it has repaid a bullet bond in full of the value of 3.673 billion dirhams, which was raised back in 2011 to address Emirates' working capital requirements. It was also disclosed that Emirates will be repaying a bond totaling 150 million Singapore dollars later this month, which was originally raised in 2001. Both bonds, according to the airline's officials, were repaid from their own cash resources, reflecting its robust financial position. His Highness Sheikh Ahmed bin Saeed Al Maktoum, the chairman and chief executive of Emirates Airline Group, commented that the repayment of these bonds illustrates the airline's continued ability to access international funding and garner support from financial markets and institutions. It was mentioned that by the end of this month, Emirates will repay 6 Islamic bonds or sukuks in full over the course of the last 5 years, totaling $2.84 billion. In 2015-2016, the Dubai-based airline raised $7.3 billion for aircraft financing, and the airline has already received committed offers to finance deliveries for the current financial year. Hotels in Dubai maintained an occupancy rate of 87% in the first 4 months of 2016, off the back of a fall in average room rate. That's according to the latest HotStats survey. The survey showed that the average room rate of Dubai hotels fell by 9.6% year to date, equal to a decline of $31.87 in the first 4 months. This came as the hospitality sector continued to expand its supply during Q1, and the addition of around 1,500 new hotel rooms and serviced apartments. It added that in the 36 months to April 2016, on a rolling 12-month basis, profit per room at Dubai hotels declined by 22.7%. The report also revealed that year-on-year revenue per available room for Dubai hotels fell by 10.5% year to date to $258.04 from $288.24 in the same period last year. Additionally, Dubai hotels recorded a 17.2% year-on-year increase in conference and banqueting revenue per available room to $20.39 from 2015. Dubai Banking Group, which is a subsidiary of Dubai Group, and Abu Dhabi Financial Group have reached an agreement where DBG will sell its 48.36% interest in SHUAA Capital to ADFG. According to news agency WAM, the completion of the sale is subject to regulatory approvals. Fadel Al-Ali, the chairman of Dubai Group, commented that the sale of Dubai Banking Group's stake in SHUAA is in line with Dubai Group's restructuring agreement. Since it was founded, ADFG has experienced rapid growth, with assets under management reaching over $3.5 billion in a short period. The first half of the year saw ADFG increase its stake in GFH Financial Group. It unveiled its plans and achieved planning approval to redevelop New Scotland Yard in London, announced its intention to launch an Islamic bank at the Abu Dhabi global market, and co-led on the oversubscribed $500 million Etihad Airways note. A report issued by the Ministry of Economy reveals that non-oil trade, inclusive of free zone activities between the UAE and Thailand, amounted to $5.2 billion last year. The report mentioned that premium raw aluminium, ornaments and precious metals were the main exports from Thailand, with cars and vehicles for the transport of people and goods, as well as jewellery, counting among the primary imports. The report showed that the Thai economy experienced a decline in GDP growth in 2014, down to 0.9% in comparison with the 7.3% growth in 2012 as a result of higher purchasing power. The inflation rate fell gradually during 2014 at 1.9%, or half of the 2011 level. Hind Al-Yuha, the Director of Foreign Trade Policies in the Ministry's Foreign Trade Sector, noted that the Thai government has implemented structural reforms to enhance the competitiveness of its economy, expedite infrastructural development, and encourage innovation. The report pointed out that the Thai government has worked towards developing the rubber sector to address global prices, increase supply and lower demand. And the country remains a strong presence in the banking, telecommunications and transportation services.